We work hard as physicians to take care of the health and well-being of our patients. But when it comes to our money, do we have the same condition of care? Probably not. Let's change that together. Welcome to the Financial Freedom for Physicians podcast, where we'll fight and advocate for your financial literacy. As always, I'm your host, Dr. Christopher Liu. Thanks for being here. Let's jump into the show. Hey guys, I want to welcome you guys to the Financial Freedom for Physicians podcast. We've got a great episode this week. Before we begin, please hit the subscribe button as well as the notifications bell, and be sure to like, comment, and share if you like this episode, and we'll get into this week's sponsor and show. This week's episode is sponsored by CityVest. CityVest has quickly become the most popular and best way for doctors to invest in top-performing real estate private equity funds that are usually reserved for institutional investors. This unique access to investing in these institutional funds is available for the first time ever through CityVest's easy and secure online investment platform. CityVest does the hard work of conducting due diligence and vetting the investments. They even get a third-party due diligence report that is posted on their website. As a result of aggregating a several $million investment amount into their access funds, CityVest gains access to investing in the institutional investment and is able to negotiate better investment terms such as a 12% preferred return. You can check them out at cityvest.com or go to the link in the show notes below. Now on to the show. So welcome everybody to this week's podcast episode for the Financial Freedom for Physicians podcast. And I'm your host, Dr. Christopher Liu. And as usual, we talk about 4 different types of freedom. The first is financial, location, time, and emotional freedom. And I always bring guests who are mostly physicians, entrepreneurs, investors who are on the cutting edge, living life as you would dream possible. So today we have Dr. Vanessa Peters, and her bio is she's the founder of VMD Investing. So she's a real estate investor for 12 years in single family homes, commercial retail, apartment communities, short-term self-storage, land, and home parks. So she's invested in over 2,500 units across 15 properties and 6 funds. She's passionate about helping busy professionals build wealth through passive income producing real estate that provides attractive returns and a proven roadmap to financial freedom. She has a book called The Busy Professional's Guide to Passive Real Estate Investing, a physician's path to building wealth, creating financial freedom, and leaving a legacy. So she's earned her medical degree at University of Calgary in Canada, and in 2002, moved to the U.S. She is a family physician and the chief physician officer for Graybill Medical Group, a primary care-owned medical group in North San Diego County with 12 locations and 80-plus providers. She's also very involved in her community, is on the board of directors for Interfaith Community Service, a nonprofit that focuses on reducing homelessness in San Diego County. And apart from that, she lives in Escondido with her husband and son and enjoys hiking, traveling, and yoga. And she has a passion for aviation. And she's earned her private pilot certificate. So without much ado, Vanessa, welcome.
Thank you so much for having me, Christopher. I'm so happy to be here.
Yeah, no, we had connected through Dr. Mike Wu Ming's mastermind, and we talked all about the different businesses that we're starting, all of this different side incomes. And for physicians, real estate is probably number one, just because of the so many advantages. So I read your bio, but tell the audience more about yourself. I know you have a lot of different nuances.
Yeah, absolutely. Thank you. Like it says in my bio, I moved down here to the U.S. right out of residency and started working as a primary care physician back in 2002. And I've been doing that now for 20 years. I'm on my 20th year. I can't believe it. And And I still love medicine and I still want to practice medicine. But about, I think it was about 5 years ago, I had a realization that all of the hard work that I had done and being frugal and trying to save as much money as I could wasn't really getting me where I was hoping to get. And that realization came kind of twofold. One was that I had been saving and tracking my net worth for several years and realized that it was a fairly straight line. And that's a good thing. Of course, it was going up. But the delta between the years of saving was really what I had saved. And so the market was going up. I thought I would see more appreciation in my net worth, but it wasn't there. And I kind of tried to map out to where I would be when I got older and realized that it wasn't good enough. I needed to find something different. And I inherently knew, we've all read Rich Dad, Poor Dad, and I read it early on in my career. And I had to just kind of put it away. And I wish I hadn't. But for me, the lessons from Rich Dad, Poor Dad felt like I had to leave medicine and do that. Now I realize I could have done both. And back in 2002, I could have purchased a lot more real estate. But in any case, I had that in the back of my mind that, that's where I should be looking. And so I started a deep dive into real estate, learning about it. How can I invest in it? And have, gone through a variety of things to figure out what the best types of investments are for someone like myself who's working. And we can get into that a little bit more if you like. But the other thing that I realized too was that I was on a vacation with my family and just had kind of an epiphany while we were riding bikes around a lake in Minnesota that was just so peaceful and happy. And I had this strange feeling come over me, and I realized that it was a feeling of contentment. And it was a strange feeling. And I was like, oh my God, I didn't realize I didn't have that, right? And so I decided right then and there to start a mission to find ways of getting more contentment. And that dovetailed very nicely with the idea of increasing my net worth and passive income so that I could be more financially free and able to take more of those times off work and vacation with my family.
It's quite an interesting journey. It's amazing because it's when you talk to physicians and they have this sudden realization that they don't have to do the rat race, and they have this feeling of just peace and contentment. It's like almost surreal because they've never experienced that. They're just so used to the the hustle bustle and then grinding and all the long hours and all the overnights. So tell us, like, did you just focus on real estate, or was it like different? What was it about real estate that was appealing to you?
Well, I did purchase a home in 2008. And so I would say that I had started my real estate journey in 2008, but it was only the one house. And that was because a realtor friend of mine had suggested that the area north of San Diego called Riverside County was going to do really well. This, of course, was right after the crash. And so there were a lot of homes on the market for fairly low prices. And so I did purchase a house in Riverside County. But since I purchased fairly early on in the downturn, the values went down for the next 1.5 to 2 years. And so I wasn't sure I had made the right decision. At that point, I was busy. I was, getting married. I had a child, and I sort of wasn't sure enough to proceed further down that path, which would have been the perfect time to purchase 20 of those homes. But, you live and learn. And so when I woke up, though, with this realization about 5 years ago, I had been tracking the value of this house, and I realized it had doubled. And I was like, oh, wow. Yes, that's what I need to do. I need to do more real estate. And of course, I wanted to replicate what I had done. But by this time, in I think it was 2018, there was no deals like that to be found in San Diego County. I couldn't replicate it. So I had to really do a deep dive. I came home with a stack of books from the library. My husband thought I was crazy, and started reading everything I could about real estate, reread the Rich Dad, Poor Dad books, Cash Flow Quadrant, and also learned about bigger pockets and started scouring the forums and learning how to invest. I got a realtor, and I started looking at purchasing something here locally. Even if it was a condo, I kept reducing my expectations from this nice big, 2,500 square foot house I bought in Riverside County down to like a 500 square foot condo because the prices had gone up so much. And I kept trying to run the numbers, and thank goodness for Bigger Pockets, because they have this calculator which makes you plug in vacancy, capex, utilities, taxes, because on the back of the napkin, I'm like, oh yeah, this will work great. Then you add in the condo fees and all these other expenses, and it doesn't work anymore. It's negative, maybe break even. And so I got real frustrated. And the other thing was that I found myself extremely distracted at work, and realized that I really probably shouldn't be trying to purchase real estate myself like in this fashion. So I started going to meetups locally, meeting other Southern California investors, like, hey, what is everybody doing? Of course, what you find at meetups, most people are young and hungry and have a lot of time but no money. And so they're bootstrapping it, they're ready to get in there and get dirty and do flips and things like that. And I was in a completely different position where I had capital, but I didn't have time. And so I learned that a lot of people at these meetups were purchasing turnkey houses out of state. That seemed to be the thing of the day when I first started looking, where someone would purchase a home in Memphis, Tennessee, through a turnkey company who had rehabbed it, and they were going to do the property management. And that just seemed scary to me. I don't know anything about Memphis. I don't know anybody there. I don't really want to purchase a home. Yeah, they're cheap, but the income per month isn't very much. And they would pick the tenants, and I just felt that was a risk. Also, the more I read on Bigger Pockets, the more I realized that when a house is empty, it's 100% empty. And, that's a problem. This is, 0% vacancy, meaning you have to cover the mortgage. And if the roof goes out, or the HVAC system goes out, then you might not have profit for a whole year. So I didn't want to do that. And I kept looking and finally found a little bit more information about real estate syndications. And when I talked to a few people who are knowledgeable in the space, I had trouble finding any information on it at that time. It's gotten a lot more available now, but they told me about the returns and the risk profile and the passive nature of it. And I was like, oh, okay, I think I might have found what I'm looking for. So I started investing passively in real estate syndications in Dallas, Texas, is where I started with a large apartment building.
I was going to ask you, because you had gone from single families, and I've solely focused on single family. And when I got to a point where it's like, oh, should I go into syndication or passive real estate investing? I was still deciding whether to do something else or, start my company or do other things. So what's the big shift between single family and going like commercial apartment syndications?
Well, it depends if you're managing them yourselves. I mean, I owned one single family home, so I knew that it was a bit of work, and I was lucky that I had great tenants. But then I purchased a short-term rental and realized that that's a whole heck of a lot of work and didn't really want to scale that anymore, because I could see, first of all, financially, sometimes you're limited to purchasing, 10 homes, 10 mortgages, and just, it's all scattered. You have to figure out all these things and need to hire help for that. The beauty of investing in a syndication is you're diversifying your portfolio. You're very low risk, and you can pick and choose different operators to work with, which allows you to spread out your risk. Whereas if you're purchasing yourself, typically you would purchase in your own backyard so that you can get to those houses and have a look at them. So those are some of the things I like about syndications.
Yeah. And then also for, I guess for some of the novice physicians, like they haven't bought their first house, or, they're a little bit priced out of, describe why like some of the advantages for high income professionals for real estate as opposed to, starting a business or other investments.
Right. Yeah. It depends on how passionate you are and how much time you have. And I know I love that you have these 4 types of freedom, because time is really the reason I'm in this, is because I want more time. And so the beauty of investing in a syndication, most of the minimums for these deals are $50,000. So that's not too bad. If you're going to buy a house, especially in a higher priced area, you're going to be putting out much more than that capital wise. Second, as a limited partner in a syndication, you have an ownership. You are percent owner in that deal. It might be a 0.01%, but you're still an owner, which means that you get a share of the depreciation, which is very important because that is one of the benefits of investing in real estate. Now, I've heard many smart people say that, the IRS tells you what they want you to do by providing tax incentives and, benefits if you do what they want. And one of those things is investing in real estate, which is why it's so tax beneficial. So as a limited partner, you get a portion of the depreciation, which means that you won't be paying as much tax on the income as you would if you were doing, stock market investing, for example, and having capital gains or lending money and getting a complete 1099 interest. So you're having to pay ordinary income taxes. So there's the depreciation, and of course there's income from real estate, which is great. And then equity, most of the deals are in an area that might be appreciating naturally, but it's really important to note that they're forcing appreciation by doing improvements. And so you buy an apartment building that's, a little older and needs new kitchens, countertops, floors, they spruce it up, and then they can charge more for rent, increase the income, and then eventually sell it. And of course, leverage is very important with real estate as well, because you can just make so much more when you're able to borrow for some of that instead of paying upfront cash for everything.
Yeah, I love that. Passive real estate allows you fractional ownership. It's the diversified, spread your risk. You get leverage, depreciation, tax. So that's wonderful. So tell us about more about your company and what you do. I know a lot of physicians may be interested in working with you and contacting you.
Yeah, so I started out as a passive investor, and it wasn't much long after that I became completely hooked, because once I started getting some checks in the mail, which was an 8% preferred return, it was like, oh, light bulb went off, and I moved as much money as I could from my 401k through my work. I had some rollover money. So if you have a 401k through your current employer, you can't access the money that is from that job until you leave that job. Let's say you had another job before, or if you have an IRA, you can actually take that money and put it into a self-directed retirement plan, like a self-directed 401k, and invest that in real estate. So I did that, and I had some extra capital, and I had a bonus, and I put all of it into real estate. And so within about 6 months, I had about 5 deals. And that might seem fast, but I just had a feeling. I was like, this is it. This is what I need to do. And I had been searching for a while. So I was pretty confident in it, and I really enjoyed it. And I joined a team where I was mentored on syndications, how to do syndications, all the background stuff that you need to do. And so I joined a team. It was great because it was low risk. I mean, a lot of the mentorships and teams that you can join now, they do require you to put in a lot of capital to start, to get the coach. And then also you're expected to bring a certain amount of money to a deal and things like that. This was really low risk and low pressure. So the first deal, I actually brought 2 people, and they were colleagues. And so me and 2 other people invested in the deal. So it was $150K we brought in. Not much, but that was okay. That was how I got started. And so since then, I've written my book, and I've done plenty of podcasts, and just really word of mouth. I don't do any advertising. I've just amassed a group of investors who I notify when I'm joining up with an operator on a new deal. And since I am still working full time as a physician, I do like to partner with other operators. I don't have time to find deals and underwrite them and manage them, and I'm also living in San Diego. So that obviously doesn't work because nobody really invests here. It's way too expensive. So I partner with trusted people that I know that I've invested personally with. And when I have a great opportunity, I can provide that to my investors. Now, I do like to diversify my assets. I have a pie chart where I keep track of my asset allocation. And initially, when I first started investing, the opportunities that were provided through that group were pretty much all in Dallas, Texas, which is a great market. But after you have 5 or 6 deals in Dallas, Texas, I realized I need to kind of get out of the box and do some other things. And so I developed relationships with some other operators. So now I have assets in Florida, in Dallas, South Carolina, North Carolina, and Phoenix. So those are kind of the main areas, and also different niches. So not just multifamily apartment buildings, but also mobile home parks, self-storage facilities, and land entitlement and build for rent subdivisions, which are single family homes that are built just for rentals. And so I think it's really important to spread out your risk geographically and also asset classes and also operators, so that if anything goes wrong, you don't have all your money in one bucket, right?
Yeah, that's a wonderful journey how you scaled, and then you start from single family to passive, and now you're doing syndications. And I know you mentioned a lot of resources, and I know you mentioned Rich Dad Poor Dad. You mentioned the Bigger Pockets podcast, and what are some other resources that helped you? You mentioned some coaching and mentorship.
The coaching was great to teach me the underpinnings of syndications. If you're interested in multifamily syndications, Joe Fairless, who is a partner of Ashcroft Capital, and that's who I originally invested with when I was first started my kind of general partner journey. He has a great book. It's a big red book. I think it's called the Apartment Book or something like that. That really goes through everything. It's pretty detailed. It's meant for people who want to do syndications. If you want to dive in like that, then that's a great option. My book is much shorter, and it's more as a primer, just about here's the high level why I love syndications, and also the benefits and some of the terminology and the numbers and how it works. Because, for example, commercial properties, the value is determined based on their income, not on how the other houses around them are doing or the other apartments around them are doing. Like residential is all based on comparables, and commercial properties are based on income, which is completely different, which is really the ticket to making good money in syndications, is by increasing that net operating income, that NOI, and then really driving value to your buildings. Yeah, I mean, other options, there's great podcasts out there for real estate, and there's many people who are coaches, but it depends on what your goals are. I really focus in my book too on like making sure that you keep track of your why. Like, what is it that you're really trying to do? It's easy to get shiny object syndrome and be like, oh, I'm going to go take a course in self-storage, and then I'm going to become an operator and do this and this. Or do you really want to have more time so that you can be with your family, or do hobbies that you enjoy, or go to 3 days a week at your work or something like that? Because those are completely different. And another thing that's really important is to keep track of maybe what your long-term goals are. For example, my long-term goal is not to become a real estate syndicator, because while I will always invest in real estate, I don't want to switch from being a physician to being a full-time syndicator and having a brand new job, a new job where I'm not as skilled as other people. I'm not as young as other people. I have experience, but there are people out there that are much better than me. And so I prefer to stick to my wheelhouse, which is medicine. I'm good at that. And then I earn money, and then I can invest it, and then I can do it again and again and again until I'm financially free. And then I can just jump off the treadmill and just sit back with my assets and the passive income that comes from that.
Yeah, I love that. Just stick to your trail. Don't worry about what other people are doing. I love that mindset. So, and we've had a great conversation. And how can folks get in contact with you and reach out to you?
You can reach out to me. My website is vmdinvesting.com, and my email address is Vanessa, VANESSA at vmdinvesting.com. And I'm happy to chat with folks. I have a calendar link if you want to pop on and we can chat about your goals. I do have an opportunity for you to pick up a free roadmap to financial freedom. And it's a spreadsheet that you can access, and it allows you to plug in how much you want to invest per year. And if you reinvest all of your dividends, where you'll be at with your passive income over time. And that is my website /roadmap. So vmdinvesting.com/roadmap. And so I would look forward to hearing from anybody. Thank you.
Yeah, awesome. Thanks so much. And we look forward to having you on future episodes.
Thank you, Christopher.
What a fantastic show. I hope you enjoyed our very special guest. Just remember, as a shout out to our this week's sponsor, CityVest.com. CityVest gives you access to the best real estate private equity funds with enhanced investment terms, verified due diligence, and lower risk. You can check them out at cityvest.com or click on the link in the show notes below. to hear about their upcoming investment offerings. I'm excited that you made it for another episode. You are truly the best. If you've been following the show for a while, you know that my passion is to bring you the education you need to find your path to financial freedom. Please come back week after week for new content, new resources, and great guests. Until then, if you haven't already, please be sure to check out the website, www.drchrislumdphd.com for more support. I'll see you next week.